welcome to NDTV Profit. I'm Hiral Dadia. You're watching a special coverage on what to expect from the railway sector in Budget 2025. Now, India is already undergoing a rail revolution, and let's understand what is India Inc.'s expectation from here on. Now, after speaking to a couple of veterans as well to understand what the outlay could be, we've come up with a number of around 2.8 to around 3 trillion rupees for the railway. Now, why this number? Now, the clear expectation is that this is the amount that will be spent on various initiatives like higher capital allocation. Now, earlier, if you see in terms of where 23 was concerned, the allocation was around 2.4 trillion rupees, and that was the highest ever that we'd seen so far. So this time around, going to be higher than that as well. Apart from that, the national transporter is also looking at revamping the railway assets. So that's number 2 in terms of the agenda that India Inc. is looking at. Moving from there on, you're looking at development of the railway infrastructure. May it be, the bridges to the railway stations. Development is a key focus area, and that's where even India Inc. is actually going ahead and building their capacities. Apart from that, you talk about enhancing connectivity as well as efficiency. So when you talk about connectivity as well, what the railway is looking at is to enhance connectivity in such a way that the transportation cost with regards to logistics starts to come off as well. So that is one of the key criteria what we are looking out for as well. And you have the India, Middle East, European economic corridor, I beg your pardon, which is underway. That is going to be of utmost importance. So these are the key expectations with regards to where India Inc. goes. But now let's quickly look at the projects which are underway so far. Now, to start off with, you have the USBRL. Now, this is the Udhampur, Srinagar, Baramulla rail link. This is one of the biggest and the most connected that will be in terms of where J&K goes. So this is one of the projects which is underway. Apart from that, connectivity increase in terms of Northeast. That's the second project that the railway is undertaking. You have the bullet train project, as well as moving from there on, the conversion of the narrow gauge to the broad gauge lines. That is also underway by the railways. Redevelopment of railway stations, launching of new trains, and you talk about the new purchase of trains worth almost 1 lakh crore that has been announced by the government so far. So these are the various projects which are underway, which is really exciting India Inc. Because if you talk about the railway companies as well, clearly in 2023, all of them have been multi-baggers. So that upmove, the capex that they are investing, now it's mainly about how to increase utilizations, the kind of orders that the government will give them as well. Very lastly, let's quickly look at the outlay. Now, if you see in terms of the budget allocation from FY21 to FY24, it has started with almost 1.34 trillion if you see on the screens. It went lower to around 1.1, and now again, FY24, it's been around 2.4. Now, in terms of FY25, as we mentioned, the number we are looking at is 2.8 to 3 trillion rupees. That's the outlay that the street is staring at. Let me introduce the panel for today. We have Vivek Lohia, MD at Jupiter Wagons, joining in with Sudipta Mukherjee, Managing Director at Texmaco Rail, and Mr. Lalit Kumar, Khetan, ED and CFO at RK Forgings. This is going to be an interesting budget as well, because it is kind of vote on account and an interim budget, but what happens from here on being an election year and the kind of outlay that we've seen in the last year, what does it translate into from here on? That's what is going to be absolutely crucial. In fact, first, let me head across to Vivek to get his views. Vivek, overall, if you see in terms of the current year and the kind of allocations that we've already seen in terms of FY24, the outlay has been absolutely a strong number. What is the expectation that you have, firstly, from a number perspective?
Okay. Yeah. Thank you. So as you rightly said, in terms of the outlay and the actual spend which we are seeing from the railways, we have nothing to complain. And what we are seeing is that the thrust on infrastructure, especially on railway side, because it was this thrust was missing for a long time, and railway is going to be the key driver when it comes to the lowering the infrastructure costs and on getting India to the next level in terms of GDP and the goal of the government for the $10 trillion economy. Uh, I think going forward, we expect the momentum to continue as outside of the budget, already you have seen a lot of announcements by the Honorable Minister himself and the Honorable Prime Minister, where they have clearly earmarked the road ahead. They are talking about more than 1 lakh crore investments in new rolling stock. There is a renewed thrust on further augmenting the railway track infrastructure. The DFCC is going to get fully commissioned shortly. The ministers already clearly mentioned the roadmap for further DFCCs to come up. There is a coordinated policy decision on development of and modernization of the various railway stations, along with thrust on lot of private infrastructure in terms of sidings and as well as private terminals. So overall, I think it is not only when you look at railways, it's a very comprehensive strategy under which the railway ministry is working, and it is both if you look at the freight side of the business as well as the passenger sides, including the passenger amenities. I think you will see a renewed momentum on all fronts.
Absolutely, a lot of areas where the government is working on it as well. So, Dipta, coming to you clearly, if you see the allocation, talking to a couple of veterans from the industry as well, everyone is pegging the allocation in that range of 2.8 to 3 trillion this time around versus a 2.4 trillion that we've seen in terms of FY24. How are you looking at that number? Because, the previous year itself, it was the highest ever allocation to the national transporter. Do you think the trend will continue?
Well, thank you for having me, first of all. And if you have to see the trend of allocation in Indian Railway budget, it has to be evaluated with the India growth story. So when we talk about the 7%, 8% GDP growth, so the infrastructure push government is giving very consciously, and as you have rightly mentioned that this interim budget and the election is round the corner, but I believe that the momentum will continue because this is part of the whole lot of a long-term plan and a complete makeover. Government is planning in and around the logistics sector to align it with the infrastructural growth story and the GDP of the country. So they say to predict a number that how far it will go. But if we even evaluate that what was there in the last financial year, and probably one encouraging fact is that this is the first time the complete allocation are going to be exhausted within a financial year. So that can be one of the positive side for the government to think over that whether we are in an optimum level or we want to give a better push. But we are sure that this momentum will grow. And even if the further thing comes, as I said, that it is all our integrated approach the government has taken, and along with that, the industry are also gearing up. So we will be very keen to look progress in the way forward. Everybody is taking part positively in this growth trajectory.
Right. Thank you, Sudipta, for your views. Lalit, coming to you as well, we've got a view in terms of the allocations and how the trend is expected to be. But if you have to look at the translation of these capital outlays into orders from the government, how has that trend been? Because, giving out a number and saying that this is what we are going to spend for the railways, but by the time it comes to, execution or order inflows from the government, sometimes there is a miss coming in on that part. How are you seeing that trend change?
No, so what we are looking at, the order already has been significantly order has been issued or given to the, I will say, the manufacturer, and the overall I will say system is in place to execute that. But what we need to watch for is the timely delivery or execution of that order. So that's another year. I will say next fiscal is significant in terms of delivery. And there we can see the allocation, what has been done in terms of fund, and the delivery from the industry is matching. And both together coming will certainly make it successful in terms of target what government has set up and what industry has been able to deliver. So both, I will say that FY26 is a year to watch for that.
A year to watch for all of us. Now, I was just looking at a couple of expectations that the industry has as well. Firstly, we already spoke about the higher capital allocation. Secondly, we are also watching out for revamping of the railway assets, developing of the railway infrastructure, enhancing the connectivity and efficiency, as well as if you talk about the India, Middle East, Europe economic corridor. These are few of the things where everyone has high expectations. Sudipta, coming to you, out of this, anything else you think could be a major beneficiary to a company like yours?
Yeah, if you see Texmaco, we are into freight rolling stock and components of the rolling stock, and of course some part of the passenger part of it. We are also into track laying, electrification, and all these segments. And it has a unique opportunity with this collaboration to play a big role in the technology sphere, including the high-speed track laying in the country. And we believe that we have tremendous opportunity in all these areas. Because if you coming back to your earlier point where you have asked we're talking about the allocations. So if you see that a significant allocation has gone to the new lines, like 35,000 crore in the last financial year, around 45,000 crore on safety. So government's push on creating new infrastructure, acquiring more trains, freight rolling stocks, and investing on safety definitely puts us in a very unique position, and it's a multiplier for us.
Right, a multiplier from here on. Vivek, coming to you as well, if you have to look at the various projects which are underway right now, you have the USBRL, you have the bullet train, you're talking about redevelopment of railway stations, conversions of the narrow gauge to the broad gauge, purchase of new trains that is coming to the tune of almost 1 lakh crores. How is it that you as a company are looking to participate, and any newer segments you think as a company you would want to enter, again in the same sector?
Yeah, so if you look at Jupiter and if you look at a portfolio, we are pretty broad based. So, whatever investments which you have talked about railways putting up in infrastructure. So if you look at specifically the rolling stock, we are pretty much there in most of the sectors. So going forward, our focus is to continue to be in the rolling stock segment, but become a much more integrated player. So bring in much newer technology. So we are introducing now the brake systems. We are thinking now we are going to be foraying into the metro segment. So our focus is going to be to continue to be in the segment which we are bringing newer technologies and become much more integrated and add more value into the segment. So that is going to be our focus going forward as a company.
Right, so that's what business is looking like overall for RK Forgings as well. Sudipta, coming to you as well, overall, from the kind of business that we are into, and if you have to look at the overall order book as well, how are you looking at that increasing? Because in terms of freight cars, I think you're sitting on an order book of almost around 5,000 odd crores. You've won the largest order of 20,000 plus freight cars from the Indian Railways as well, and execution is underway. But with the way the outlay has been increasing from here on, and if you have to match your capacities to it, where do you stand as a company?
The figure would be little higher. It is in the range of around 7,000 crore and whatever we are here today. And we definitely, being in the rolling stock, we are having further capacities to do it. And we are doing a lot of capexes in and around the rolling stock as well as the component ecosystem. And other than that, as I was telling, that is part of how we have taken it as a company. In the beginning, as I was telling, that it was part of a Indian growth story, and you have seen the increased emphasis by railways in the to match the aspirations of the young India, to change the expectations of the people who are the stakeholder of railways and in and around. So it's a complete comprehensive journey which is evolving around, and which we have also imbibed while we are an important stakeholder of the whole growth. And we are trying to position ourselves very consciously as a leading technology company in this sphere. As Honorable Railway Minister also mentioned, decoding that the emphasis is more on technology, quality, and safety in and around. So it's again enriched experience and towards a much more matured and global positioning of the country as a whole, or we as a supplier or stakeholder of railways. So in each sphere where we are in, we are consciously progressing towards that to become a global company by this make-up journey of the railways.
Absolutely, the Atmanirbhar Bharat journey of the Indian Railways is absolutely helping well. In fact, in terms of Jupiter Wagons as well, clearly, Vivek, we are seeing the way you want to increase capacity as well to meet this growing demand. Order book absolutely remains robust for you. I think last when we spoke as well, you were clearly indicating that a visibility of almost 18 months is what you're sitting on in terms of execution. How is that expected to change with the allocations increase? How are you going to meet the capacities?
Yeah, so as you rightly mentioned, our focus going forward is on capacity. So we have been very clear that by the end of this year, we are looking to produce about 1,000 wagons per month. We have a very robust capex outlay. Over the next 2 years, we are going to be spending more than 1,000 crores on our capex, which includes expansion of our foundry, which again goes towards the backward integration, which we are talking about. We are looking at wheel set manufacturing, and that will not only cater to the Indian demand, but especially for the European markets, as we have very strong presence through our partnerships in Europe. The whole idea is, going forward, Indian Railway itself, we are seeing further demand for at least between 30 to 40,000 new freight wagons. The private sector demand it's very robust. There is a lot of investments, private capital for the first time after a long period happening across all sectors, be it steel, cement, power. So that in turn will again create additional demand going forward. So definitely on the demand side, we don't see any challenge. So our whole thrust right now is on capacity building.
Right, so capacity expansion is what is on the cards as we speak. We're running out of time, but one last word with all of you. Firstly, Lalit, if I come to you in terms of what we've discussed, apart from that, what is your key expectation from the government? Any specific ask that you have from an industry perspective?
Yeah, if specific to the railway area, I think the government should allocate more budget for the sustainable growth, improving, I will say, station infrastructure and more on the R&D activity. That I think is the ask for the day, and certainly everybody is expecting increased allocation, and I think that is going to be there. But we should not expect too much also from this budget, as this is an interim budget, and government will come with the full budget once the elections are over. But overall, we feel there cannot be any disruption, and government will be looking for a stable regime in terms of policy on the regulatory side or on the tax side. All this should remain stable, and just look forward for the more allocations and more spend on the infrastructure side.
Absolutely, the infrastructure spends should remain stable as well. So, Sudipta, what would your word be?
So the expectation would be that the same requirement will continue. It may grow also, but as I said, that is again against a long-term plan. So the consistency, which is going to be key, and we're sure that government will take care of that. And as additionally, if you ask for a wish, so I wish that government emphasis on the railway sector, or as a whole in the infrastructure, that pushes on production of emerging technology, or to be qualitative and focus on safety and world-class experience in and around railways. So we as a company, if we come across with certain thing, or the companies which are coming up with, if the PLI scheme a bit extended, in terms of assurance, assured uptake, or whatever way, in the way forward, it will foster and it will bolster the government's push to be world class and number one in the world.
Right. Vivek, coming to you as well, any tax benefits, PLI scheme extensions, what is it that you think as a company that you need to grow? Because, the industry with regards to railways, I think I was just looking at the end of December 23, all railway stocks have been multi-baggers, from a stock price performance perspective. Investors have been really happy as well. So what is it that you think that the government should be doing so that this process continues?
Yeah, so I think that, in terms of investments, there are no complaints, and we believe that the investment is the government investment on infrastructure will continue. I think the key is on the execution piece, because going forward, I think the way the economy is shaping up, and across, in terms, say, if you look at freight or the passenger business, you see more and more demand coming up. So I think it's very important that the infrastructure has to keep pace. If the infrastructure is going to keep pace, I don't see a reason why demand is not going to come in. So I think the key would be on the execution. I think that's where the real focus should be. Definitely, PLI is something, because this is a sector. This is one of the few sectors which has not been covered under the PLI scheme. And especially now with the thrust which we are putting on in terms of modern technology, on India being the export base to the global market, that is becoming more and more of a focus.